Good morning. Thank you guys so much for tuning into today's live stream. It is July 17th, 2025, and to begin today's live stream, let's take a look at the economic calendar here. So, the three major, news today would be core retail sales month over month, retail sales, and unemployment claims. Unemployment claims came in a lot, or not, I wouldn't say a lot, but it came in better than forecasted. 221,000 was the actual outcome. Forecasted was 233,000. Retail sales are up 60 basis points compared to the previous negative 90 basis points. And so, it looks like from here you can make the assumption that, the labor market isn't extremely, I wouldn't say it's weak, right? And core retail sales are doing better than the previous one. All right, and so with that, let's take a look at the economic calendar here. Or not the economic calendar, but actual technicals. And so coming into today, I do want to draw your attention towards this daily candle here. And with the previous daily candle that we closed on Wednesday, I can make the assumption that we should most likely take out the daily high, which is going to be that green line there. And notice, that with the way that we close on Wednesday's candle, you can make the assumption that we should take out Wednesday's high of day. Another way that you can approach this is, it's a more objective way of looking at it, but is the blue line closer to the green line, or is it closer to the red line? And so objectively looking at it, the blue line, Wednesday's closure, is closer to Wednesday's high, which is that green line. And so with that, my bias coming into today was I wanted to see prices take out the daily high. And so coming into the London session today, we did end up taking out the daily high. And so after we took out the daily high, I don't necessarily have a daily bias left coming into the morning session, right? And so my best approach coming into today so coming into today, my best approach would be to rely on the intraday time frames, such as the 4-hour candle and this 8-hour candle. And so depending on how those two candles close will give me a bias of whether I'm going to target the 4-hour low or the 4-hour high, and the 8-hour low or the 8-hour high. And those two candles close in about 23 minutes. And so I'm not going to force anything here until we close on those two candles. And so that's pretty much all that I have in mind coming into today. Not really, forcing much to happen. Just being a lot more nimble and patient coming into today. All right, and yeah, so it's been a while. I haven't streamed for the past Monday, Tuesday, and Wednesday. I was away on a trip and did not have the time to do any streams with you guys. But yeah, glad I'm back, and yeah. So that's pretty much all I have coming into the morning session. For the technicals, at least. I'll probably just dive into some of the pros and cons, and I'll go over a little setup. I'm going to break down a setup that I noticed on Tuesday. I didn't take the setup, however. I wasn't really in front of the computer screens Monday and Tuesday, but I do want to go over it with you guys just to, give you guys more insight on the way that I view prices. Alright, so here are some of the pros and cons coming into this week that I just want to go over. The first is to continue to take consistent setups. Every single setup that I take is going to have a higher time frame objective, a model, and a entry pattern. I'll go more into depth of each one of these whenever I go over the example, because it's a little bit easier for me to explain through pictures and an example. But just keep in mind that every single setup that I take is going to have these three components: higher time frame objective, model, and entry pattern. The second is to pay close attention to SMT between correlated assets. So in this case, NQ and possibly ES, right? One thing that I did notice is that there is SMT divergence here with NQ and ES at these lows. So where that red line is, to where this red line is connecting, this low and this other low here, there is an SMT divergence. So notice here on ES, that's what we look like, right? So here on ES, you can see that ES, we have taken out this Monday, July 7th low with July 16th low on Wednesday. And so because there's this SMT divergence, this allows for the idea of a possible reversal, right? And so, oh yeah, bye ma. Yeah. Yeah. And so yeah, because there's this SMT, it shows you that there's a possibility of a reversal. I wouldn't straight up call it like I'm going to force there to be a reversal, but it gives me the understanding that there's more probability of a reversal because there's SMT. So just pay really close attention to where there's SMT and how correlated are these two assets, right? Third is to utilize every single time frame. You have to understand that time is fractal, and every single trading concept can be applied to different time frames. So I gave you guys like a brief kind of like idea of this is like coming into today, right? The fact that I started on the daily time frame, and I expressed the idea that we should take out the daily high, which we did take out the daily high during the London session. And after we completed the daily high or the daily objective, I am no longer going to force any ideas anymore on the daily time frame. So I'm going to have to pivot from the daily time frame onto a different time frame, such as time frames on the intraday time frames, right? So like the 4 hour, the 6 hour, the 8 hour, the 10 hour. Sometimes if I can't utilize those time frames, then I'll utilize, the 1 hour time frame, the 30-minute time frame, the 15-minute time frame, right? And so if you can understand that this whole open high low close, open low high close is present in every single time frame, this is going to open up your perspective on a lot of these concepts, right? The fact that I can make the assumption that we should take out the daily high just simply based off of the candle's closure is powerful. But not only that, but if you apply the same concept but to a 4 hour candle, it could work the same way. So I will give you an idea here once we close here on this 4 hour candle. And like here, let's just do a random example. Like here, with the way that we closed here on this 4 hour candle, you can make the assumption that we should take out the 4 hour high, right? Based off of the bullish closure. And yeah, so the fact that the 4 hour candle's closure is closer to the high than it is to the low makes it to where I can frame a trade based off of us taking out the 4 hour high, right? It's not definitive, it's not definite that we'll take out the 4 hour high. It's just, it gives more probability to me that we should take out the 4 hour high. If I can continue to stack ideas and concepts on top of each other to increase the odds of a trade playing out in my favor, then of course I'm going to do that, right? And so there's a lot more nuances to this approach. I'm not going to simply press a button because of the way that we closed, but there's a model and there's an entry pattern and there's understanding SMT, right? In the way that I trade. That's just one little snippet right there, is that you have to understand that price is fractal. These concepts can be applied to different time frames, and you have to utilize every single time frame, every single different time frame as a singular page in an entire book. Every single page is going to help develop the story's plot and structure, and it allows the reader to have a better understanding of what is the message of the story and what is it trying to convey, right? And the last thing here in the pros and cons for this week is just to be patient. We've taken out all-time highs here, and we're continuing to make new all-time highs at the moment. And so I don't really want to force anything to happen. I don't want to force and press a button simply because of a way that a candle closes. There's more confluences that I require, such as the 3 that I mentioned. And it's best to, sit on your hands and allow the markets to present you with your strategy. There is never a situation where you're going to be forced to take anything, right? You're never forced to do anything here. In this whole game, it's it's dependent on how well you can execute your strategy. How disciplined are you, right? How patient are you? How well can you control your emotions? And how well can you control yourself, right? There are multiple instances where whenever I first started, I would get this feeling, this urgency to like press a button every single day, as if I was forced to do something every single day. Prices, things, your strategy, or at least mine, doesn't happen like that. There's a lot more steps for my strategy to play out, and if it's not present, then there's no need for me to be forcing anything. And so that's basically the pros and cons. To really highlight everything is this page here. So the first is to remain consistent, right? Every single trade that I recap with you guys, every single trade that I review, they're going to be pretty much similar to other trades that I review with you guys. One trade, and if I were to compare, this trade that I'm going to review with you guys pretty soon, and if I compare it with another trade that I took like 2 weeks ago, they're gonna have the same outline, same structure, just maybe different time and maybe different price points. But they all have a general consistency to them. Second, like I stated before, is to watch closely between the relationship of NQ and ES. They are correlated assets, meaning that they should be trading in tandem with one another. If there's SMT, then that shows you where there has been manipulation. And if you're currently in a trade, SMT can prevent you from taking any unnecessary losses. The third is that you have to understand that we are at all-time highs. So you don't really want to force, a bias here on the higher time frame. What I mean by that is, let's take a look at the 6 hour, or not the 6 hour, but the 6 month time frame, right? And so this was the previous 6 month closure right here, where that red line is drawing your attention towards. And with the way that we closed here on this 6 month candle, the easiest assumption was that we should take out the 6 month high. After we complete this objective, I'm no longer utilizing the 6 month time frame anymore, right? That objective, at least, has been completed. So there's no need for me to force anything on this time frame. And so that's kind of what I mean by we are at all-time highs. Don't force a bias on the higher time frame, which could be replaced with the 6 month time frame. So don't force a bias on the 6 month time frame. We just completed a major objective. This would be a good time to utilize intraday models, right? To go onto a lower time frame relative to the 6 month time frame, and to use those lower time frames for a bias. Every single candle is going to have an objective, which is why you can treat different candles with different objectives, right? Fourth is you want to pay close attention to your entry pattern. And what I mean by this is there are going to be a couple questions that you want to ask yourself about the entry pattern, right? And for me, my entry pattern is always going to be a fair value gap. The first question that I ask myself is that should this fair value gap even be treated as a entry pattern, right? Sometimes there's fair value gaps that should be treated as a breakaway gap, meaning that we shouldn't even rebalance into it. If we shouldn't rebalance into the fair value gap, then that fair value gap shouldn't be treated as a entry pattern. The second is, are we respecting the consequent encroachment of the fair value gap? Consequent encroachment is essentially the midway of a fair value gap, right? And so you just want to track that. Ask yourself those two questions whenever you are deciding on what fair value gap to enter off of, and if you should even enter it in the first place. Last but not least is to track my 10K journey. I'm going to journal every single trade that I take with you guys, and I'm going to do my best to try to remember to record every single execution. Recording my execution, live execution, is going to benefit me a ton. It's going to allow me to kind of have an understanding of how I am behaving, how prices is affecting me, like I want to be able to see how I kind of view prices under pressure and whenever the P&L is actually changing. And that's gonna basically wrap it up for the pros and cons here with you guys. So I did promise and state that I will go over the trade that was present on Tuesday. And so let's begin with that. And so the first thing that I always look for whenever I am going to take a trade is that I always identify a higher time frame objective first, right? So for this specific trade, let's take a look at this daily candle here. So this daily candle here closed, and notice the way that we closed here on this daily candle closure. I can make the assumption that we should take out the daily low, right? The daily closure is closer to the daily low than it is to the daily high. And so with that basic, very, very basic outline, I'm going to be bearish for the next day. So within the next daily candle, I am going to be looking for models that will align myself with anything that's bearish, right? And so that's going to be my higher time frame objective. But in this trade specifically, I actually have two higher time frame objectives. So the second higher time frame objective here is that, let's take a look at this swing low and this swing high. So from the swing low to the swing high, there is a dealing range. And within this dealing range, there's a couple of components, but the main thing is that there is that kind of midpoint, that equilibrium in the dealing range. And in this equilibrium here, there's discount, which is anything below the blue line, and there's going to be premium, which is anything above that blue midpoint level. And so the idea, the second higher time frame objective for this trade is for prices to retrace back into discount, right? Prices is giving an opportunity for us to retrace back into discount. So think of this as in a normal market. You go into a grocery store and you are a buyer. As a buyer, you're going to want to buy things when it is in discount. And vice versa. If you're a seller, you are going to want to be a seller whenever prices is in premium, when prices is more expensive, right? And so in this case, the idea is that prices is giving buyers an opportunity to buy. Now, we haven't had this opportunity yet from this swing low and this swing high. And so there is a incentive for prices to retrace back into this discount level. And so that's the two higher time frame objectives for this specific trade, right? So first is based off of the daily candle, I can make the assumption that we should take out the daily low. And second is that prices should continue lower towards the discount of this dealing range here. And the way that I align myself with this bearish higher time frame order flow is based off of this 4-hour candle closure. So this 4-hour candle here, the way that we closed, I can make the assumption that we should take out the 4-hour low. And so it's bearish, right? This 4-hour candle is suggesting to me that within the next 4 hours, we should take out the 4-hour low. And what is the higher time frame objective telling us? After we complete the 4-hour objective, we should expand lower, meaning we should continue lower towards the daily low, which is highlighted here for you guys, and continue lower towards the discount of the dealing range. So that's kind of the model in the higher time frame objective. I'm going to go back to the live charts and take a look at how we are closing here on the 4-hour candle. All right, and so this is the 4-hour candle closure here. With the way that we are closing, I can make the assumption that we should take out the 4-hour high and the 8-hour high. So I'm going to be bullish here coming into this upcoming morning session. Give me 1 second. I'm going to log into my trading account. All right, so I'm going to be bullish here. I'm going to be targeting the 4-hour high and the 8-hour high. All right, and so the 15-minute high here is actually the same high as the 30-minute high, which is the same high as the hourly high, which is the same high as the 4-hour high, which is the same high as the 8-hour high. Because the 15-minute high is the same high as the 8-hour high, I can make the assumption. This allows me to scope into the 15-minute time frame and state that we should complete the 8-hour objective within the next 15 minutes. So within the next 15 minutes, we should complete this objective of us taking out the 8-hour high. So let's see here. Here's the open. And like stated, the morning objective is for us to take out that red line. That's what I want to see. And not only should we take out this red line here, but we should take out this red line within the next 15 minutes. So sometime here from 9 a.m. Central Time to 9:15 a.m. Central Time, we should take out this red line, this 15-minute high slash 8-hour high, right? And we just did that actually. So we just took out the objective. Pretty interesting, right? It's a super simple approach. It's very simplistic, right? And let me just kind of break you guys down on the reason why I wanted to see higher prices, if it's not simple enough. So the 8-hour candle closure and the 4-hour candle closure, notice where the closure is. The 4-hour candle closure is here, and the 8-hour candle's closure is at that blue line. So here, that blue line, you want to ask yourself is the 8-hour candle / 4-hour candle closure, is it closer to the green line, or is it closer to the purple line? Here, actually, let's do orange. So it's a very easy like analysis, right? The blue line, which is the closure, is closer to the green line. That's where I came up with this bias of higher prices. Now, after we have taken out the 8-hour high / 4-hour high, I'm no longer going to utilize these two time frames anymore. The only time where I can use the 4-hour candle and the 8-hour candle is whenever we create a new 4-hour candle and a new 8-hour candle. So until then, I'm not going to utilize these time frames. And yeah, let's take a look on ES if we have done the same thing. On ES, we haven't taken out those highs yet, but yeah, so that's where we are, and the morning objective has been completed. So for me, let's take a look. Let's just finish this trade recap here with you guys. So I left off on, explaining to you guys what the higher time frame objective is and how there's two higher time frame objectives. And I also explained to you guys how I'm going to align myself with this bearish higher time frame order flow. And so because my model here is based off of the 4-hour time frame, I'm going to go onto the 1-hour time frame for more information, right? So this 1-hour candle, I'm going on the 1-hour time frame here. And so this 1-hour time frame, this 1-hour candle has the same low as the 4-hour low. So the hourly low is the same low as the 4-hour low. What can you gain from this? What information can you get from this, right? Well, because the hourly low is the same low as the 4-hour low, I can use the idea of scope and treat the 1-hour candle as my model instead of the 4-hour candle. And so this means that we should complete the 4-hour objective within the next 1 hour, right? And so now my model's on the 1-hour time frame, right? The idea is that after we take out this hourly low, we should continue to expand lower towards the discount of the dealing range and towards the daily low, right? And so let's take a look for a entry pattern. My entry pattern is going to have to be a fair value gap, which could be treated as a gap that gets rebalanced and should be respected for lower prices, right? So I'm going to be looking for a CIBI, a sell side imbalance, buy side inefficiency, which is better known as just a bearish fair value gap. And yeah, so going from the 1-hour time frame, I go into the 30-minute time frame, and I notice that there's this 30-minute fair value gap that could be treated as a fair value gap that gets rebalanced, right? It's not here, I'm not treating it as a breakaway gap. I'm treating it as a gap that could be traded into to be respected and continue lower. And so that's my entry pattern. I have the higher time frame objective, which is the daily power of 3 and the discount level, or not the, I guess, the fact that we should be retracing back into the discount level. I have my model, which is based off of the 1-hour power of 3, which is the same low as the 4-hour low. And my entry pattern is a 30-minute fair value gap. And so here, this is the outcome of the trade. prices rebalances into this 30-minute fair value gap here once we open up during the daily open. So we open up, we trade into the 30-minute fair value gap. I take my entry, I set my stop loss, and then we slowly but surely continued lower. We took out the 1 hour we took out the 1 hour / 4 hour low and continued towards the discount level here. After we took out the discount level, we continued lower towards the daily low. And that's basically how the trade played out, right? Very simple approach, and it all began with the understanding of what was happening on the daily time frame. The daily candle is suggesting lower prices. How can I align myself with this bearish, daily candle? Well, I can align myself with the bearish higher time frame order flow with the 4-hour candle. And the idea of scope allows me to treat the 1 hour power of 3 as the 4-hour power of 3. And going from the 1 hour model, I enter off of the 30-minute fair value gap. And so that's pretty much that's pretty much it for me. That's all that I have for today's little trade recap. But yeah, I would say this is, if I could rank this from like S rank to D rank, this would be a S rank trade, right? There's everything that I'm looking for, and there's even 2 higher time frame objectives. There's 2 bigger reasons for lower prices. And yeah, I think that's gonna wrap it up for today's live stream. I mean, the morning objective has been completed already. There's really nothing else for me to force here. I think one thing that I would leave you guys with here is pay close attention to how we close here on the 6-hour candle, because that will give you another bias coming into the afternoon session. So pay close attention to how we close on the 6-hour candle, and utilize different time frames. So for right now, because I can't utilize the hourly candle, I can't utilize the 4-hour candle, I can't utilize the 8-hour candle, 6-hour candle is still being created. Same thing here on the 10-hour time frame. The only thing that I can do is wait for like a new 15-minute candle to close for more information, for a better bias. Same thing on the 30-minute time frame too. So yeah, so that's pretty much all for today's live stream. Thank you guys so much for tuning in. I will be live streaming tomorrow as well on Friday. And thank you guys so much for welcoming me back. And until next time,